Roberts. Remember to go to our homepage. We're on Sunday. We will have a special release with one of the top money managers in the world discussing gold, silver, major markets, and much more. But without any further delay, here is Dr. Paul Craig Roberts. Joining us now is Dr. Paul Craig Roberts. He is the former Assistant Secretary of the U.S. Treasury and former Associate Editor and columnist for the Wall Street Journal. Dr. Roberts, you'd seen the quote on King World News that we put out from William McChesney Martin, the longest-serving chairman of the Federal Reserve, serving under 5 presidents from Truman to Nixon. Quote, but a note should be made here that while money policy can do a great deal, it is by no means all-powerful. In other words, we should not place too heavy a burden on monetary policy. It must be accompanied by appropriate fiscal and budgetary measures if we are to achieve our aim of stable progress. If we ask too much of monetary policy, we will not only fail, but we will also discredit this useful and indeed indispensable tool for shaping our economic development. When you contrast that to what we're seeing today, have they abused it to the point where that warning wasn't heeded and we're headed for trouble?
But there's really no comparison between his time and our time today. Monetary stimulation stimulates production in other countries, such as China, where, for example, all of Apple computers products are made. And so monetary stimulation today puts the Chinese back to work, and the Indians and the Indonesians. That is U.S. monetary policy. So there's not anything comparable to the economy that William McChesney Martin oversaw. Today, the Federal Reserve's policy is focused on saving a handful of very large banks, both American banks and British and European banks. These are very huge conglomerates that financial deregulation permitted to become such extraordinary concentration that they're just massive institutions. And the belief is that if one of them were to fail, the consequences would be that the entire financial system would fail.
Let me ask you this. What do you expect for the balance of 2016?
Well, I don't think the House of Cards will make it through the year. But I've been surprised so far because the Federal Reserve, in conjunction with the U.S. Treasury, no longer seems to be limited by what would have been considered proper policy, integrity. You know, the New York Fed has a trading desk that's as big as any in the world. They can trade anything, not just bonds, stocks, commodities, currencies. And since the Federal Reserve can create money at will, I mean, endless amounts, they can intervene in any markets and create whatever money they need to support those markets. And so as long as they have the impression of a good stock market and a good bond market, they can keep the impression going that we have a good economy, even though we have 23% unemployment. So as long as the Fed can support the financial markets and keep them from collapsing by its own interventions, then the sort of psychological impression that, well, the economy must be doing good and I must be out of work just because of my own fault. Nothing to do with policy. It's just I'm just not employable anymore, and that's just my problem because look how good the stock market's doing. And look how low the interest rates are. How can there be any inflation? When I go to the grocery store and find the prices are always higher, I must be dreaming. They couldn't really be higher because the government tells us inflation is zero. So as long as you can keep the image of a strong financial market, you can keep the image that the economy is prospering. As we've said before, the only real limit, in my opinion, on the Fed's ability to support financial markets through money creation is the value of the dollar. When will the continued growth in the Federal Reserve's balance sheet cause all confidence in the dollar to be lost. Well, I would have thought it would happen before now, but the Federal Reserve has other methods. For example, it has the European Central Bank doing quantitative easing. It has the Bank of Japan doing quantitative easing. Well, that's the three big currencies, the yen, the euro, the dollar. If they're all printing, then there's no problem with the dollar losing value relative to the other big currencies. And if everybody's printing, it kind of forces all the little countries to do the same thing. Otherwise, their currencies become so valuable as people seek a stable currency that they can't sell anything. You have to remember, it was a few years ago, the Swiss government had to stop the rise in the Swiss franc that was resulting from American QE by stating that all further efforts of currencies to seek refuge in the Swiss franc would be met by printing more francs, and that they would not let the Swiss franc, go up any higher in value. So all the countries get forced into printing when the big currencies print. Moreover, as my colleague, or co-author, I should say, Dave Kranzler and I have shown repeatedly, the American regulatory authorities permit the bullion banks, the big New York banks that serve as Federal Reserve agents in the gold and silver markets, they are permitted to use uncovered shorts in the bullion future market to drive down the price of gold and silver and to prevent its rise. So if they can prevent gold rising in price in terms of dollars, then they are protecting the dollar from their policy, just as they protect the dollar from their policy by having the Japanese and Europeans print their own currencies. So the question is, what could happen that would cause the Federal Reserve to lose control of the ability to manage the value of the dollar? And if nothing can cause that, then the house of cards can be kept going forever. We'll have a 50% rate of unemployment and a stock market at 20,000. So the way the central bank now can manipulate markets and conduct policy for the benefit of the markets, not for the benefit of the employment or real incomes of the population. This means a failing and economy that's hollowing out, producing all kinds of social dislocation, hardship, can be presented as a success because stock prices are high, bond prices are high, interest rates are low. So I don't know what can cause them to lose control of the dollar. And we see increasingly agreements like these various transnational, trans-Pacific, transatlantic partnerships where it looks like Washington is organizing the world against the dissident BRIC countries, Brazil, India, China, Russia, South Africa, because these are the countries that say we're withdrawing from this Western monetary system, this Western payment system. We're going to operate independently. Well, I think Washington is doing its best to neutralize that independence, if it's successful, from having any adverse effects. But if there were a run on the dollar and there was massive dumping everywhere of dollars and nobody outside of the United States, for example, would hold dollar-denominated assets, then the dollar would collapse, the Fed would lose control of policy. If the dollar collapses, American power goes with it. And so a dollar collapse would probably cause the Federal Reserve to let the banks go and raise interest rates substantially, hoping to encourage other countries to continue holding the dollar.
Dr. Roberts, we're going to cover gold in just a minute, but right now King World News has a special running with BitGold where King World News listeners can earn a 5% deposit bonus up to $100. What that means is they can deposit $2,000 into their account and instantly be credited with $2,100 of gold. You can take advantage of the special offer by emailing alexander@bitgold.com. That's ALEXANDER@bitgold.com. BitGold is revolutionizing the world, and you can become part of that revolution by opening your account today at bitgold.com. Dr. Roberts, we've seen gold rally this year, and it's put in a good move to the upside. We're having a pullback, obviously, here on Friday, but your thoughts on gold and where it's headed from here?
Well, Eric, people are buying gold continuously, but the price of gold is not determined in the market where they're buying it. It's determined in the paper futures market, and that market can be manipulated by the creation of paper futures contracts. So the way the whole market is set up is for manipulation of the price. What do we know? We know that the demand for bullion is very high, and it's been growing. There have been periods all during this time when both the Canadian and the U.S. mints have had to either suspend sale of 1-ounce coins or ration the coins because they can't get the bullion to print enough coins. So we have clearly high demand. We clearly have supply constraints. So how could the price be falling? It falls because of the paper manipulation. And we've talked about this before, and David Cranston and I have illustrated it over and over. We've shown the actual real-time manipulations, how all of a sudden the price would go, whoop, drops through the floor at 3 o'clock in the morning when nothing has happened to cause anybody to flee gold. We've shown this over and over and over. So there's no such thing as a pullback and a rally. There's a constant demand for gold that's been rising, and for silver, and it's apparently not always easy to meet when the Canadian and American mints have to call timeouts because they can't supply the coins, and yet the price falls. It's clearly manipulation. It's manipulation that's approved, if not initiated, by the authorities. I think I've told you before that I wrote a letter to the Commodity Futures Trading Corporation. I said, look, this is clear manipulation. There's no other explanation. If you have one, please tell me what it is. Why do you turn a blind eye to this illegality? I didn't get a reply. Former Assistant Secretary of the Treasury, I didn't get a reply. Not even an acknowledgement. So if the authorities are complicit in rigging markets, you can't expect anyone to know what the outcome of all this will be. And you have to ask yourself, why does the New York Fed have a trading desk that it allows it to intervene in any market? Currencies, commodities, stocks, bonds. You know, it's very easy. Suppose the stock market's trying to correct, and it's falling. All the Federal Reserve has to do is go in and buy Standard & Poor's futures. That reverses the fall. And you have to keep in mind, there's no limit on the financial ability of the Federal Reserve. They can create endless amounts of dollars. So if you have the authorities committed to maintaining the image of a successful economy because of sustained stock and bond prices, then you've a rigged economy.
In closing, what is the great danger facing the world today?
Nuclear war, because the neoconservative drive for world hegemony, which, of course, is supported by the big banks, because they have a drive for world financial hegemony. It's supported by the military security complex because it's good for their profits, power. It's supported by the oil companies because it's good for their dominance. So if you have this drive for world hegemony and you're confronted with Russia and China, Iran on a regional basis, and Syria, and you can't exercise this hegemony because these countries are in the way, then you focus on destabilizing those countries. That's what all the trouble in Syria is about. That's what all of the setup of Iran for attack was about. You may remember, weapons, nuclear weapons in Iran, nuclear weapons. All this was to set them up for attack, just as Syria was set up. And, of course, the Russians and Chinese have stepped in to prevent that because they finally caught on, but they were next. Well, if you're going to try to destabilize Russia and China, as we're trying to do, that's what the Ukraine coup was about. You know, we organized the coup in Ukraine and threw out the elected government and stuck in our puppets and began having them attack the Russian provinces of Ukraine, resulting in them leaving and one of them reuniting with Russia, Crimea. If you're going to go to the length of trying to destabilize Russia and China, here you're dealing with very powerful countries, with powerful militaries, with powerful nuclear forces. And unless they're just willing to surrender, which we see no evidence of, the result's going to be war. Because what we're telling them is, we will not accept the existence of any country that has an independent foreign policy. So you can give up your independent foreign policy and follow our lead, or we're coming after you. We're going to stay after you. That's the message we keep giving them over and over and over. And they've got the message. And so what do we see? We see them both into massive modernizations of all their nuclear forces. We see developments of all kinds of new weapon systems. Indeed, now the Russian weapon systems are superior to ours. We see the Chinese developing missiles that neutralize aircraft carriers, making them our aircraft carriers now are as obsolete as our battleships were in World War II. So all of this is war. And there are no winners from nuclear war. You have to remember that the atomic bombs we dropped on Japan, these are minuscule compared to hydrogen bombs. And nuclear warhead today is something like 17,000 times more powerful than the atomic bombs we dropped on Japan. So it only takes a few of them, and there's nobody left. And we have all these war games and all this gaming for how to win a nuclear war. And you get people who start believing that they can win one. And so I think that is the big danger. Of course, it's also a danger that the economic policies in the Western world and the ones that the Western world have imposed on what's called the developing world produce very high rates of unemployment, and therefore they produce social instabilities. You know, we already have a 23% rate of unemployment. That's enough for social instability. If, as many expect, the U.S. economy has never recovered from the 2008 downturn and is about to turn down again, that 23% rate is going to go up. So we're also faced with the fact that the focus of Western economic policy, which is entirely on saving the big banks, can result in massive social instability. So we have the prospect of massive social instability and nuclear war. And no one is addressing either of these problems. When I say no one, I say no policy official, no government office, no government agency. It's all directed at we have to have hegemony over the world. We are indispensable. We are exceptional. Only our power counts. Only our laws count. Well, that's a formula for war.
Dr. Paul Craig Roberts, former Assistant Secretary of the U.S. Treasury and former Associate Editor and columnist with the Wall Street Journal. Thank you for joining us on King World News.
Pleased to speak with you, Eric.
Be sure to tune in on Sundays. KWN will have a special release with one of the top money managers in the world discussing gold, silver, major markets, and much more. And be sure to tune in each day as we will continue to release interviews with the top people in the world throughout the week. Also, make sure to check out the King World News blog.
Is very high, and it's been growing. There have been periods all during this time when both the Canadian and the U.S. mints have had to either suspend sale of 1-ounce coins or ration the coins because they can't get the bullion to print enough coins. So we have clearly high demand. We clearly have supply constraints. So how could the price be falling? It falls because of the paper manipulation. And we've talked about this before, and David Cranston and I have illustrated over and over. We've shown the actual real-time manipulations, how all of a sudden the price would go, whoop, drops through the floor at 3 o'clock in the morning when nothing has happened to cause anybody to flee gold. We've shown this over and over and over. So there's no such thing as a pullback and a rally. Being the big banks can result in massive social instability. So we have the prospect of massive social instability and nuclear war. And no one is addressing either of these problems. When I say no one, I say no policy official, no government office, no government agency. It's all directed at we have to have hegemony over the world. We are indispensable. We are exceptional. Only our power counts. Only our laws count. Well, that's a formula for war.
Dr. Paul Craig Roberts, former Assistant Secretary of the U.S. Treasury and former Associate Editor and columnist with the Wall Street Journal. Thank you for joining us on King World News.
Pleased to speak with you, Eric.
Be sure to tune in on Sundays, KWN.
Forever. We'll have a 50% rate of unemployment and a stock market at 20,000. So the way the central bank now can manipulate markets and conduct policy for the benefit of the markets, not for the benefit of the employment or real incomes of the population. This means a failing and economy that's hollowing out, producing all kinds of social dislocation, hardship, can be presented as a success because stock prices are high, bond prices are high, interest rates are low. So I don't know what can cause them to lose control of the dollar. We see increasingly agreements like these various transnational, trans-Pacific, transatlantic partnerships where looks like